It's another edition of the Trading Tips video newsletter, teaching you how to become a successful trader today. This video newsletter is brought to you by TradingTips.com.
Welcome to this TradingTips.com video newsletter on price channels. In this episode, you'll learn what price channels are, how they're calculated, how they can be used, and how to interpret them. Without further ado, let's begin. A price channel is a chart overlay consisting of a pair of solid lines. The top line is set at the X period high of the stock in question, while the bottom line is set to the X period low. X in this case equals a specific number of days, weeks, months, minutes, etc. For instance, if we were using 20-day price channels, then the top line would be set at the stock's 20-day high, while the bottom line would be set at the stock's 20-day low. In addition, price channels are usually accompanied by a dotted center line, which represents the midpoint between the X period high and the X period low. The calculation of price channels is straightforward. Once you determine what period you want to represent X, let's say 20 days, then the upper channel is set to the stock's 20-day high, the lower channel is set to the 20-day low, and the center line is set at the 20-day high plus the 20-day low divided by 2. Notice that at the end of each period, in this case a trading day, the newest period's data is included in the calculation, and the oldest period's data is deleted. If, for instance, a stock's high was $100 10 days ago, then its upper channel line would remain at $100 until either A, the stock went higher, or B, the day it hit $100 was dropped out of the calculation because it was more than 20 days old. In this way, price channels have a rolling effect. However, it should be noted that price channels do not include the current period. Price channels are based on prices prior to the current period. Here is an example of price channels applied to the S&P 500. Once again, notice the rolling effect. So how can price channels be used? They can help identify upward thrusts that indicate the start of a price surge, or downward thrusts that represent the start of a downtrend. Price channels can also be used to determine if a stock is overbought or oversold within the context of a larger trend. Now for how to interpret price channel data. First and foremost, a surge above the upper channel line indicates tremendous showing of strength and likely the start of a new uptrend. Conversely, when a stock falls below its bottom channel line, it is an extremely bearish sign. Once a new trend has been established, however, chartists recommend switching to a shorter time frame. If you were using 20-week data, for example, a switch to 5-day data might be appropriate. At this point, surges above the upper channel line can be viewed as overbought, and falls below the bottom channel line can be read as oversold. Context is very important. Price channels can be added to your charts made at StockCharts.com. Select Price Channels from the Overlays drop-down menu and enter the number of days in the Parameters section. It's that easy. So in conclusion, price channels consist of 2 solid lines and 1 dotted center line. The 2 solid lines represent periodic highs and lows. You can add price channels to your charts in order to help predict price trends and identify overbought or oversold conditions. However, context is key. You need to know the rules for how to interpret whether a surge should be considered a bullish breakout or a stock that is overbought. No technical indicator is foolproof, but after watching this video, you should have a basic grasp on how to use price channels to better inform your trades. We hope you've enjoyed this video newsletter from TradingTips.com. Thanks for watching and good trading.
This Trading Tips video newsletter has been brought to you by Manny Bacchus's First Hour Trading System. Every day there's money to be made in the first hour of stock trading. This is the world of day trading, not for novices, unless you have a system. The First Hour Trading System. Visit firsthourtrading.com now and sign up for a free 30-day trial. You could make enough in the first hour of your day to take the rest of the day off. View more Trading Tips videos. Visit TradingTips.com. Sign up for our free video newsletters and become a successful trader today.